Now, over the past decade, Bitcoin and other cryptocurrencies have exploded in popularity. But before you start investing in crypto, it's important to have a solid grasp of how it all works. And joining us to discuss more is Michelle Schneider, Director of Trading Education and Research at Market Gauge. Michelle, thank you so much for joining us. First up here, what are the benefits of trading crypto versus trading traditional stocks for those who don't know?
Well, first of all, looking at what trading a stock means is you're actually buying into a company. So if you're buying into a company, you are essentially counting on that company to keep the bottom line of profit high, which is a reason why a lot of companies wind up doing their own buybacks and cutting costs, et cetera, to make that bottom line so that the shareholders are happy. When it comes to buying crypto, you're actually buying a currency. And so as such, it's something that has a store of value if you can actually spend that currency on something. And as we know, there are plenty of businesses now that are taking Bitcoin, for example, as a store of value or a way to pay for things. And that will continue to grow over time. That's probably the major benefit, but there's a couple of others. One is that Bitcoin has a limited supply and only 21 million Bitcoins are out there. So that gives it a scarcity if more buyers come in, whereas stocks, there is no real scarcity because they can always, let's say, divide a stock, do a split, etc. So Bitcoin is also buying into a technology, which of course is a very speculative technology at this point, but certainly one that many believe, and myself included, is the wave of the future.
Lots of good points there. Since you mentioned Bitcoin, it trades almost 24 hours a day. So what kind of strategy should investors have in mind when trying to get in at the right time?
Well, a lot of commodities trade 24 hours a day as well, or at least 23 out of 24 hours a day. So you have to make certain decisions when you're trading something that is around the clock. And generally, what I've done through the years is I've really decided to not get up in the middle of the night and look at any positions I might have in commodities and including in Bitcoin, for example, but rather use an opening range of what happens based on the New York Open. So if you're holding Bitcoin, let's say on a day like today, and you came in and it came in lower, you waited about a half an hour, you probably would have said, oh my goodness, I'm wrong. And then of course the whole thing turned around. But generally speaking, waiting for that first half an hour turns out to be really good because after the first 30 minutes, then you can get an idea of what the trend is for the day. Some people simply would day trade, and with its volatility, of course that's very doable. Because of its overnight volatility, people do not want to necessarily carry, and that's where you get more into I'm looking at it long-term buy and hold situation, in which case the whole strategy would be completely different.
You mentioned that with crypto, you're investing into technology as well as currency. What are the benefits of long-term investing when it comes to cryptocurrency?
Well, ultimately, it's a much more efficient way to share data. And it's going to be something that's going to be impacted pretty much in every industry, from art and music to real estate to technology, just basic business. And so as such, that's why you're getting so much slack here about the mining of it, because they're saying it's environmentally unfriendly. But over the course of time, that will change as people are more innovative in terms of how to mine it. But the technology itself, is the speed of it and the efficiency of it is really not only so much faster than what we have there traditionally right now, but will continue to improve, and that's going to make all transactions, no matter what they are, much easier and much faster and even much cheaper as time goes on.
Speaking to traditional stock or real estate investors, how can investing in crypto help to diversify your portfolio?
Well, there are some very big people like Paul Tudor Jones who are saying that you should have 5% of your portfolio allocated to cryptocurrency. And so clearly you see that it's getting adopted by much more mainstream type investors. There are so many ways to put some exposure to crypto in your portfolio besides buying the absolute coin. For example, Grayscale is about to release potentially 13 more ways that you can buy in the trust of coins. You can buy already Grayscale trusts in Bitcoin and in Ethereum. And then there's a whole bunch of companies that you can look at that are using Bitcoin and Ethereum, like, for example, PayPal, Square, Mara, MicroStrategy, Riot. And then there are some smaller stocks that are being listed on NASDAQ currently. One is called HUT, H-U-T, and the other one is BITF. So if you're afraid of these lofty prices, they're trading under $5 a share, and that gives you a very good way to get your feet wet if you've never traded in the crypto space before.
More and more companies are also offering crypto ETFs and securities as well. How would the approval of crypto ETFs impact the market?
I think it would be a positive. Just like commodities trading was just pure futures, and then eventually you were able to trade a lot of ETFs, like, for example, GLD, rather than buying pure gold. It'll be the same kind of thing. It'll bring in much more liquidity over time, much more legitimacy over time. Of course, you always, I think, no matter what, will have to look at the underlying coin, depending if you're going to be looking at an ETF. But for the most part, the slippage is not bad, and if you catch a parabolic move, you're going to make good money regardless of whether you're buying the coin itself or buying one of these future ETFs, and I think that's what people will come to understand.
Michelle Schneider, Director of Trading Education and Research at MarketGauge, thank you so much for stopping by.